Toast stock has been down 20% since my first video on the stock. Am I missing something from my original thesis, or is this just bad timing? This is why this is called investing. We are dealing with risk, and each position is not going to go our way, at least not initially. So I wanted to revisit Toast before earnings, which is coming out February 12th after market close. Overall, the stock market has bearish sentiment. Large AI spending is scaring investors out of tech and going into utilities, energy, and metals. Anthropic's Claude Cowork sparks sell off in legacy software companies because of AI's potential to automate professional services like legal and coding tasks. These AI tools are disrupting once high moats of proprietary software. Plus, consumers are behaving more consciously. Chipotle posted rough foot traffic as customers pull back spending. If consumers stop spending, then Toast does not make money. Macros are hard to predict, but here's what I know. Toast has been recording growing revenues year after year. I'm using financial data from udomo.com. I can see financial statement line items for thousands of stocks in one place. You can get started for free at udomo.com. In 2020, Toast posted 665 million in revenue, while in 2024, this number grew to 4.96 billion. Gross profit is up as well, 1 billion in 2024, and Toast became a positive net income company after years of negative income, which is a great trend to see. Toast is proving profitability is possible. But simultaneously, as the fundamentals are increasing, the stock price has declined overall since IPO. It's worth noting that Toast probably didn't deserve to trade at such a high premium back in 2021. After all, interest rates were low while stock speculation was high back then. We are seeing historic discount valuation ratios in Toast stock. Toast's price to sales ratio is near its own historic average of 4, currently at 4.3. The financial services price to sales industry average is at 5.2. So Toast's 4.3 is at a discount. It's harder to use other ratios like free cash flow because of Toast's recent achievement of positive net income cash flow. Toast is also growing at healthy growth rates. Revenue in 2024 is up 28%. Gross profit grew 42% year over year. These are strong growth numbers to see in a fintech stock. Simultaneously, Toast is debt free. Toast has no long term debts and mainly has operational liabilities instead, giving Toast a balance sheet advantage compared to other payment solution companies. Since Toast does not have interest payments to make on massive loans, they are much less vulnerable to high interest rates than many other growth tech peers. We can attempt to take a glimpse into Toast's earnings by looking at MasterCard and Visa, who have already posted earnings. After all, Toast payment systems at restaurants take credit cards. So we can see what these legacy payment system companies are saying about consumer spending to try and gauge Toast. Both are saying good things. From Visa, total processed transactions rose 9% year over year to 69.4 billion, but this figure missing the visible alpha estimate of 69.7 billion. Payment volume increased 8% from a year ago in constant dollars. Cross-border volume increased 12%, and processed transaction advanced 9%. From MasterCard stock rose 2.2% in Thursday pre-market trading after the card payment network's earnings and revenue exceeded Wall Street expectations as resilient consumer spending continued to support volume on its network. The CEO of MasterCard said that the overall macroeconomic environment is supportive, and we continue to see healthy consumer and business spending. Payment networks revenue increased by 12% year over year, or 9% on a currency neutral basis. So, based on Visa's and MasterCard's earning reports, it sounds like consumers are spending money. If spending continues to increase, especially at restaurants, then Toast will make money. Toast serves approximately 140,000 locations and are popular with small to medium sized businesses. Think of mom and pop shops, independent restaurants, fewer than 50 employees. These are your coffee shops, food trucks, bars, nightclubs, casual dining, and quick service chains. That being said, I'm sticking with my Toast position. Unfortunately, the position has gone against me, but I believe this is a case of being early and not wrong. Of course, not financial advice, and the stock can go lower. I think what's important for Toast going into this earnings is to post positive, uplifting guidance. If Toast management can say with confidence that 2026 is going to be a strong year and that 2025 was also a strong year, then we can see an uplift in this stock.